Hello, everyone. Welcome back to another podcast, episode 5th. Today we have Kashif with us as the co founder of the Funding Frontier and really exceptional trader with a funded capital of over $400K. And we are excited to know about his trading journey. So let's start with the podcast. So, how are you?
I'm good. Sahil, thank you so much for hosting this podcast.
It's my pleasure because, I've seen everything you have done so far. I've been following you for quite some time, I think. I'm not sure, but you were on the feed a lot of time on Instagram.
Yeah.
And yeah, so I think you have secured around how much in payouts, like 40 above 41K.
So it's this month just alone, like I've secured $41,000 from Alpha Capital, and I got like $16,000 payout in pending. One payout I already requested, and the other one is like $8,000. That's I'm gonna request on 3rd of July.
Amazing. So we're gonna start with the first question that I have is like, tell us about your journey, like how you get into the trading and how was it in the start and what was the challenge you have faced till now.
So basically, I picked my father used to be a part-time stock market trader with his job. So I picked up trading as a hobby through him, like at a quite young age of 14. And then I just started to see like how the stock market was, and he used to guide me. And that's when jumping into this industry, I got to know about forex. And like it's back in 2016, that's when it was the first time I got to know about forex. So the initial challenges I faced is back then, like 2016, 2015, the industry was really still young, and there was not too much information in the market, or I can say like there were not too many influencers or people who have already made it out through trading, right? So for new beginners coming into trading back then, like it was quite hard to get your hands over a
Yeah.
strategy or get your hands over any information, like what broker should I use, and should I use indicators or should I not. So back then that was quite a challenge. So for me, like my initial challenges were the same. Like I had to self learn everything. So it
Yeah.
took me like 2 years to get my hand over everything, like self learning. So that was, I think that was the big challenge back then, like not having enough information in the market.
Yeah, I agree on that because I think on trading industry we got more to the upside on the internet after like 2013, 14. After that people started noticing things. But before that, I'm not sure that there are many people who are giving advice on this stuff, or you should have more knowledge, or you should have in your family someone to teach you things. So I understand, like you face some problem, and even right now for us, for me as a trader, like I have a pretty good thing because I can access information easily. I can talk to someone. There are a lot of people who are trading. I can go there, ask questions. Another great thing is similar to like podcasts and things. People can share their journey and show things. So it's pretty amazing. So tell us
Yeah.
about your tell us about your till now I think you have get funded of 1 million capital in total. Is that right?
No. No. Right now, like I'm funded 400K.
400.
So
Yeah.
it's yeah, 4 accounts.
So so you're targeting to 1 million. Is that
Yeah, yeah, I'm targeting to 1 million, but like it's not that easy because I would say you can either trade funded accounts at the same time, or you can trade challenges, because the psychology behind trading a challenge is way different than trading a funded account.
okay? So can you explain a little bit more? What do you mean by like different psychologies? Like what is the difference between when you are trading a phase one, phase two, and when you get to funded account?
So basically, like for me, like when I'm trading the challenges, like I'm more aggressive. I take higher risks per trade. So for example, on my challenge phase, like I break it down like into 5 trades. That means like my total drawdown is like, let's say 10%. So I'm gonna break it down to 5 trades, and that's gonna give me 2% for each trade. So
Okay.
if I lose 5 trades in a row, I'm gonna lose the challenge, right? I'm gonna
Yeah.
lose the $500 like for which I've purchased the challenge. But on the other hand, trading a funded account, that's a funded account, live account, I'm more conservative. I go in with 0.5% risk to build up a buffer above the initial balance, so the progress is more slow, like as compared to a prop challenge.
Yeah.
So that shift from aggression to conservativeness, like from the challenge phase to funded, like it's really difficult. So if you're trading a challenge, you cannot trade a funded account at the same time. Like, I don't know for others, but I face this as a challenge.
Understood. Yeah. So, I did get funded with Funding Frontier because I did pass the phase one, phase two, and I got the funded account. But I made some profit. I was around up 2% on the account, but then I lost it. And like, it's not like I lost in a day, but I lost the profit. And then next day I came in, I keep trading for the whole week. But every day when I do take a trade, I lost. So I don't know why that happened. But on the phase one, phase two, I was like making sure that I do not lose more than 1% a day. I don't know what would you advise me, like if I have already passed the one time funded account, and if I need to do it again, because I am doing another funded account right now, so I'm up around 1% on that account. It's been a week. I started just on Monday. What would you advise me at the moment?
I would say like in trading, like you do get some losing streaks. You do get some days like where you have a series of losing trades, and that's where you really need to identify the losing pattern. Because when we get into a losing streak, we don't understand like what's really happening. Rather than we just try to rush into another trade to recover back the loss. So when you start to take a losing trade, like you need to sit back tight and see like, hey, why you have started to lose. Either it could be there could be some changes like in your emotional self, or there could be a change in the market itself. Like for example, let's say on week one you've been trading, the market been trending really smooth, and you made profits in a really smooth trend. But the second week the market is like just sitting up at the top, and it's consolidating,
Consolidation.
and you might be trading in that consolidation and like having that losing streak.
Yeah.
So that's where like you need to sit back tight and see, hey, what's the market is doing. Is the market like giving me the losing streaks, or it's me that forcing myself
Forcing the
onto
trade.
trading to have that losing streak. So once you ask this question from yourself, I'm pretty sure you're gonna get answer, right? It's
Yeah.
always within a trader. It's just like we just neglect it, and we just like go out there, rush out there to get the
Yeah.
other trade to make money. So once you look down into that, like you get your answers, like why are you having that losing streak,
Great.
and
So
that's the advice.
great, thank you. So I will keep that in mind. So right now I'm doing so I do trade every day. Like most likely, like I'm just looking at the market. Most likely I do trade London and New York session. So we'll keep that advice in mind. So tell us, like as you are funded with a 400K capital, what advice you will give who is trading with a funded capital or on a phase one, phase two, or they are trading with a personal capital as a trader and they're facing some problems. So what is the best advice you will give them at the moment from your experience?
Okay, so it depends like what kind of
Mm.
problem you're facing. So, but I would say like if for profitable ones, the traders out there who are trading live accounts and they're making consistently 10 to 20%, I think prof firms, they are a big opportunity to leverage your skills, to leverage your profitability, right? But if you are not consistent on a live account, if you haven't traded a live account and made money, I wouldn't suggest like coming into the prop firm, because it's more hard than trading a live account, because you have drawdown limits, you have daily drawdown limits, so you have to adhere to them. That's where like only a trader who has been profitable with his live trading journey is going to make in the prop space.
Understood. Okay, sure. So there are some other questions. It's like if from your Instagram feed that people have been asking, like, what if they have a fear while holding a trade or taking a trade after losing streak? So how can they deal with that?
So basically, having fear in your trades is directly correlate with your comfortability about how much you are comfortable to lose, right? So if let's say you're trading $100 account, like I'm just going to give an example. If you're trading $100 account and you risking 10% per trade, and you're not comfortable with that 10% risk, like obviously you're going to have the fear. Hey, what if I lose that trade? You'll just keep checking. You'll be just keep playing with your stop loss, keep playing with your take profit. So when you are comfortable to lose, and once you have decided, hey, I'm gonna risk 1% on this trade, and I'm comfortable losing 1%, that's not gonna bother me much psychologically, emotionally, then you will not gonna have fear in your trading. So guys like who say like, hey, I'm fearful when I'm trading, they mostly risking too much.
Yeah,
That's the only
agree,
thing like which can give you fear. Because
agree.
if you taking a well rational decision based risk, then I don't think like you will be fearful.
Yeah, that's true. That's true. So there is another question is asking like whenever I increase my risk, I couldn't hold the trade in profit. So what would you say? Like they do not close that trade when they are in profit.
Uh,
Hold it till it goes in the drawdown in simple terms.
So basically, when you increase the risk, is directly comes down to your emotional attachment with money, right? So
Yeah.
like if you're increasing your risk, you're not letting your winners run because you're seeing that money and you're attached to that money emotionally, and you have
Yeah.
you have that fear. Hey, what if that trade goes back to break even or hits my stop loss, and that makes you to close that trade. So it all comes down to comfortability with trading, right? If you are not comfortable to to lose the money or to let go of that money in trading, you're always going to have that fear. You're always going to have that urgency to close the trade early. So that's where it all comes down to, right?
Yeah.
But if you have decided your rules and your risk parameters, you will never close your winners early.
Yeah. True. So if we talk about like till now, if you have gotten like 400K in funded, like in that journey from starting till now, what was the moment that you have difficulties, and would you say that you come up from that and continue with this journey? So like, what is that?
I'll be honest here. Like, just like all other traders, I'm not someone like who just like purchased the challenge and made $40,000. Who? Yeah, there goes a lot behind the scenes. Like, I've failed more than 40 challenges. Right? That's like $20,000. Like what I failed like over a span of 6 months. Right? So,
Okay.
but it all comes down to like when you identify your losing pattern, you get to know, hey, where you are making the mistakes. And when it starts to fall in place, like all of the losses you made like over 6 months or years, like you're gonna make it back like with 1 month of profits, right? So that was the challenge I faced, like just like every other trader. I failed challenges, and it was really, really stressing. It was really, really depressing, to be honest. Like purchasing a challenge and just keep failing and failing and failing. That's where, as I said, like I asked this question from myself, hey, why I'm failing these challenges and these other people like they making payouts. And that's where I got to know like my mistakes, which I was making psychologically and also from the technical chart strategy point of view. Once I got the answer to that, like that's what made me profitable. So now like I have a really, really high pass ratio when I buy a challenge.
Great. Okay. Like for traders, you guys need to understand that this is not a one night thing. Okay, this is not a one night thing. So, okay, moving on to next question. As you mentioned that about strategy. So, how would you describe your strategy? What is the main strategy that you're following right now?
Well, I just recently moved into smart money concepts. I'm trading some basic supply and demand zone. So if I put my strategy into simple words, like it's I look for supply and demand zones on 15-minute time frame because I'm trading intraday. So for example, if I'm about to trade New York session, I would mark out my supply and demand zones on the 15-minute time frame and wait for the price to tap them out. Right. Once those
Okay.
zones I get tapped, like I jump down to the lower time frames to get the confirmation that okay, this is a valid supply demand zone and we are having a reversal on the lower time frame, such as 1 minute, right? Once
Yeah.
I start to get that reversal, like that's where I get into my trade with a stop loss below or above that supply demand zone.
Okay.
So it's pretty simple, which give like this way of trading like gives me an average of 1 to 3 risk reward ratio. So even if I'm getting like a 60% win rate with that 1 to 3 risk reward ratio, and like sometimes even 1 to 5, like it nets out like to a good net profit.
Okay. So how much time did it take you to learn this strategy and now being too profitable?
Hmm. So, this depends like from person to person. For me, personally, like I've been into smart Raja concepts from last 2 years. That's where I started my trading career with Raja Bank strategy. So I would say like I've spent like a real good time in smart Raja concepts. I stood with that strategy for 2 years, and that's what really this Raja Bank's way of trading smart Raja concepts. It really gave me that understanding like how a candle prints, right?
Yeah.
What when the volume comes to the market, what is the impulsive trade entry? So his way of trading really gives you that intuition level of trading where you get to know, hey, if a candle is printing bullish, the next candle is gonna make a bottom wick and it's gonna flip and continue the trend.
Yeah.
So that's what like gave me like a real good understanding in visualizing like how a candle prints. So once I got that, like that's when I got to know about smart money concepts, where it was like you get like a really high risk reward trades. So I thought like, hey, if I'm able to predict the market 80% of times correctly, like how the candle's going to print, that means like if I can mark out the zones from where the trend starts, that's really going to give me a big leverage in my trading, because SMC, you aim for supply and demand zones and you're waiting for reversal from the point of origin where the moves happens. So I was like, hey, if I can identify the key levels or the zones where the reversal is going to happen,
Yeah.
then obviously like it's going to increase my reward. So that's where I took a leap into smart money concepts.
Great. So basically, like even I trade SRC. I have been learning from the YouTube section, and I have taken his course. So I know, like now I understand about the candles and stuff. So would you advise like I should start learning SMC? Because so another question right now is SMC and SRC. What are the difference? You have traded both, so what are the difference here? Like if you trade both the strategy, which strategy is the best? And should you follow directly to SMC, or you should know the basic and then you need to get into SMC?
Well, Sahil, that's a really good question, and that's the most frequent asked questions I've been receiving from the day I've moved into SMC. So let me just break it down to you. SMC is alone itself not going to make you profitable. It's not the strategy, it's the person behind the strategy. It's the person like who foresee the market, like how you are going to take a strategy. Like it depends like person to person. So SMC alone itself is not going to make you profitable. So for the traders out there like who's saying like, hey, we want to jump into trading and we want to know a strategy like as a at a beginner level, I would suggest like go with SRC, because that's what really gives you understanding of candlesticks. Because once you are able to visualize the candle printing, once you are able to visualize like how the market's going to print candles and how it's going to move in what direction, and what is a range, what is a breakout, where you have to wait to take a trade. Once you get that basics correct, then like automatically like you will start to adopt like SMC into your trading. SMC, it's not just a strategy. SMC is the way of market, that like how the algorithm delivers the price, right? So you cannot get to advanced levels once you haven't done your basics, right?
Yeah.
So that's a frequent question I've been asked. Hey, should we move into SMC, or should we start with SMC or SRC? Hey, if you are not profitable with SRC, moving into SMC, like it's not going to make you profitable either, right? So it's not the strategy, it's the person behind a strategy, and it's the narrative behind the strategy. Like a lot of these guys, they take a strategy literally, right? For example, if SMC says, hey, if you have an order block,
Yeah.
right, or if you have a fair value gap, you have to get into a trade. So let's say you're getting an order block on the 5 minute time frame, and you literally followed that rule and you got into a trade, but you haven't checked the 1 hour time frame, which is impulsively bearish. So if the higher time frame is impulsively bearish, or there's a strong bearish momentum, your 5 minute bullish order block will not be valid. It will be breached. So
Yeah.
it's not the strategy itself, it's the person behind the strategy, and especially it's the narrative behind the strategy. You gotta have to get confluences stacked up to get into a trade, and you have to be dynamic with every strategy. Strategy is not just like a set rule, hey, that's how you're gonna make profits. Like it's the way of trading. It's how you communicate with the markets, or how you're gonna let the markets to communicate with you, right? So
Pretty,
that's
pretty amazing.
my 2 cents on this.
Pretty great answers. Like I love it. The way you describe things, amazing. So
Thank you.
we have another question. So can you share, as you are the co-founder of the funding frontier, what is the statistic right now that people have passed funded accounts and lost it? It's like what can you explain on that?
Well, I would say like trading itself, like it's really hard. Like if you keep prop firms aside, if we keep all the prop firms aside, like just like in trading, like we know like 90% traders, or even 95% traders, they fail or they give up, right?
Yeah.
So all these traders, these forex traders, when they come into prop trading, the failure rate is same. Like it's I would say like it's more than the standard. Like so the stats says like 90% people, they fail the challenges, right?
Okay.
So it's same as the forex
So
forex industry. Like
so
so
90% people, they don't even make it to phase two or funded account, or
No, it's not like that. Like it gets broken down into like if 70% people they move to phase two, then out of that like many people fail again. It just gets filtered out. Like so by
yeah,
the time
okay.
like a trader reaches a funded account, so that's like just 5% of traders that reach the funded account.
Hmm. So like what are the common mistakes most traders do, as you have the experience? What are the common mistake that you have done till now? And it's like I'm saying it common because you have done it but you do it again. So is there in something like that you have faced with when you're trading?
Well, as I said, like I've when I started prop trading, I've failed like more than 40 challenges over a span of 6 months. And the common mistakes, like what I've seen, like is rushing into the challenges, using your total drawdown in a single day, right? So that's from a running frontier. And now, like from a trader's perspective, what I've seen, like the most common mistakes, like these failed traders they're making, like it's rushing into the challenges and not letting the price action do its thing. For example, if you start your day, you have a 5% total daily drawdown limit. They're going to make sure like they keep using the 1% per trade until they breach the daily drawdown or until like they're close to breaching the daily drawdown. So once you down like 5%, like psychologically, it becomes really difficult to come back to break
Come
even.
back.
So that's a real big mistake. Like I would say the key take here, like if you lose 1% in a day, that means the price section isn't for you. That trading day isn't for you. You just need to call it a day and come back another day and with a different setup, with a different mindset, with a different trade opportunity and recover your loss. Don't try to overtrade and recover your loss like on a same day with the same price section because you might be trading a range which is not going to give you profit because range trading is always 50-50. The price can either go up or it can go down.
Okay. So the another questions is like you have traded technical analysis mostly, or you trade fundamentals as well?
Well, I totally trade technicals. Like to be honest, like I don't rely on fundamentals really because fundamentals for me is just like a key indicator to getting volume in the market. So if I have the news, like I'm not gonna base my trades like based on the news. Hey, we're having NFP and I'm expecting the price to go up. No, I'll just let the news pass. And once the move has happened, then I'm gonna like, hey, okay, we got a positive NFP, gold dropped, and gold dropped back to the support zone. That means like we can get a reversal from that. So I would totally base my trading off technicals and keep fundamentals just an volume or volatility indicator, or I
Okay.
would say like a volume aggregator in my trading.
Okay, understood. There's a person who's asking for is like he's at a break-even stage in his trading journey. For last 6 months, he have not made any profit, but not the loss as well. So how would you advise him that he could come over and be a profitable trader?
So if you are a break-even stage, like that's a really good thing because at least like you're not making losses, right? The only thing you need to do is identify the pattern of your losing trades, right? Because once you are able to break that pattern of your losing trades, eventually you will become profitable. And how you are going to do that is through backtesting a data set of series. For example, how I've done that personally, like so for example, like you have to backtest like 20 trades, and once you have a 20 trades data set, like point out your losers and write them down. Note your thought process down, why you took that trade and why it gave you a loss, right? Once you have that, you do another data set of 20 trades, you backtest another 20 trades, and let's say like out of those 20 trades, you got like 10 losses, you break those losses down again. Now, once you have two data set series, you just compare your losing trades with each other. The common losing trades is what is your losing pattern. And once you
Yes.
get to know your losing pattern, like I think like it becomes really easy to break out from it.
Okay, great. So another question is, I am from India and I'm in the second year of the college. Should I leave study for a month and focus on trading or not?
No, you shouldn't be dropping out from your studies and just focus on trading because trading itself, like it's the most painful and it's the most hardest profession out there. So with trading, you gotta have to have a consistent income or a flow of income to sustain your day-to-day life, to sustain your bread and butter, and then you can take trading as a hobby and just see like if it's working out for you because trading it's not for everyone. Like it's not for everyone. Like trading is a life itself. You have to adopt trading into yourself, and if you like only a person like who is balanced in life financially, emotionally, psychologically, he's gonna make good in trading. But if you're not well covered like financially or emotionally, then trading itself like it's not gonna work out for you. So you shouldn't be dropping your studies. You should continue your studies. You should look for an income stream. You can start another business. You can start your job, and along with that, once your bread and butter, your finances, your monthly expenses, they're getting well covered, then you can uh, like try out trading as a hobby. And if trading starts to work out for you, then eventually you can shift from your job or from your business to more towards trading, because then it's making out for you. But just like coming into trading, dropping out of studies, not having any money, not having an income stream, it's not going to make you profitable in trading, because you will be rushing into trades to make money. And once you're chasing money in trading, like it doesn't work. It's like you gotta have to trust the process. You gotta have to flow with the way of trends and with the way of price action.
Okay, great. So basically, like as a person who does not have any financial problems, so they can do better in the trading industry, or they still will face the issue with other things. If you do not have the pressure,
Well,
what I mean is,
Well, definitely it gives you an edge when you don't have the financial pressure, because why people they come into trading? To escape the nine to five, right?
yeah,
And escaping 9 to 5 means like you gotta have to sacrifice your 9 to 5 to come into trading. Once you sacrifice your 9 to 5, you don't have an income source. And once you
yeah,
don't have the income source and you sitting on the charts and like it's 25th of the month, on 30 you have to pay the bills, you will be like, hey, I gotta have to trade to make the money. And you might force trade and lose like in a range, right? So
yeah,
it directly correlates to having a strong financial background, or at least you're having your monthly bills covered. So
okay,
it really gives you an edge. And definitely, yes, a person who is financially secured, he got his bills covered, or he got other business income streams. Trading it gives that gives an edge in trading, because he is emotionally stable. He is not rushing into the trades. He let the price section do its thing and just go along with the way of markets. So yeah, it really gives you an edge.
great. So another question is like from transitions to, like as you said, your father was in stock market, right?
Yeah.
So from stock market to forex, like how was it? Well, if you have you traded before stock market, and what are the differences between in the stock and forex market? What would you advise that to choose from?
Well, I say, like back then, as I said, like back then there was not too much information out there, and at that time, like stock market was for me, it was just like totally based on calling your broker and buying a certain shares, right? You don't have that technical edge
Yeah.
at all. You just have that number game. Hey, if a share is trading at $100 and uh like day or two, like it's trading at $70, so that means the price is at a discount level, and you have to get into buy. So back then, like a lot of traders didn't have that edge to charting, to technical side of trading. So it was quite hard for me. But getting into forex, getting to know about technicals, getting to know about candlestick patterns, and the MetaTrader itself back then, that's what really helped me out. So the transition was, I think, really smooth, because once you in a stock market and you have your basics covered, like getting into forex, like it becomes easy. It all comes down to getting your basics covered. And the drawbacks of stock market back then, like, is limitation of capital. So in stock market, like if you cannot leverage your capital, whereas like in forex, like you can use
Yeah.
leverage, and you can leverage your profits also. Like if you're on the wrong side of the market, you can fuck up as well.
Yeah.
So that's an edge like you get in forex, whereas like in for me, like back in stocks, I wasn't able to leverage my skills or leverage my capital to make those juicy gains.
Yep. As you mentioned, like, back like 1 or 2 years ago, I was teaching somewhere here in India. So how do I explain leverage to them? Is a simple thing. I draw a sword and tell them there is a two side. Okay, one is profitable and one is losses, but they both will cut you.
Yeah.
Okay, simple as that. That is the leverage for you.
Yeah, exactly. That's a good metaphor.
Yeah. Okay. So about prop firm industry, as you know most of it, so would you advise, like recently have, if you know that about the 5 forex fund, and if we cover that side, would you advise the trader to still stick to the prop firm, and if so, how they can find a better prop firm and continue with them?
Well, prop firm space, like it came out really diverse, like blown up after my forex funds went down. It gave a lot of room to new players in the market to come out. But at the same time, like not every prop firm like is going to sustain this business model. So you have to, as a trader, like when you're looking for your prop firms, I wouldn't say like go with Funding Frontier. I would say like do your due diligence, because out there, if a prop firm is offering you a 50% discount, or like too good to be true offers, that means that prop firm is trying to get your challenge fees and rug pull on you. So
Yeah,
you have to do your due diligence. How long the prop firm is operational in the market? How much payouts they have made? Are they having any payouts problems? You have to like do your research, go on their Discord, go on their socials, and have your due diligence. So that's my 2 cents on it. Like you gotta really gotta have to check on the background of a prop firm,
yeah,
and most importantly, you have to see like who's the persons behind the prop firm, right?
yeah.
So once you
You
know
need
the
to see the
person running the
person.
prop firm, and yeah, you know like it's been in operations like from 2 years, and they are like having that gradual growth in the market, that means like the prop firm is sustainable. It's going to sustain in the market along with the big firms out there.
Yeah, understood. So there was another thing that I wanted to ask. So in my forex fund, in the document, they mentioned that they were running some kind of a software, backend software that do the slippage for the traders and they lost them out. So do you think this kind of a software could be running for other prop firms? And if so, how can we stay away from it?
Well, basically, my forex fund, they were using their own unregulated broker in Canada, right? That means like if you have your own unregulated broker, you can eventually like play around with the spreads. You can have markets, you can have slippages. So that's something
Okay.
like if that could be done, right? So when you're trading with a pro firm, you have to make sure like they're not like adding slippages, they're not adding markups to the spreads, right? They're not like acting funny when there's a news volatility in the market. So that's what you have to look for. But yes, like it's possible like once you have your own broker or unregulated broker to play around with conditions to yeah.
Right. Okay. Great. I guess for the last part, what kind of advice, including me, as I'm do so for me, like right now I'm just 21 and I like to trade as a hobby, and this is the best thing I got, to be honest. I love financial markets. So what would you advise a person like me or below my age who are getting into trading? How would you advise them to grow in personal life and into trading industries?
Well, I would say like stop rushing the game. To be honest, like you have to look at your own journey. Stop, including. I would also give this advice to everyone, including myself. Like you gotta have to stop rushing. You have to look at your own pace of trading. You don't have to compare yourself with other influencers or other mentors, because that's a really big problem. Like which gives that urge to get into a rush. So like if you're seeing an influencer like making a $50,000, $100,000, like you just start to rush the process, right? That's really true. So you need to focus in your own game on your own game, because the person you're looking at, like he is on his page 100 page and you're on your page 1. So you have to build slow and steady and trust the process. That's what's really important. And to be honest, like take your time in trading. I would say, what's the point of coming into trading? To escape the 9 to 5, right? But if you coming into trading and you're sitting on the charts like 9 to 5 or 24 hours and you're just sticking to your cell phone even while you're sleeping, like what's the point of coming into trading? You don't have that freedom of time. You go back to your 9 to 5. That's
Yeah.
better. So uh, it's something like you need to take it slow and steady. Everything's gonna fall in place. Just try to be rational. Try to be really rational in trading and journal out your trades. If you're making losses, why are you making losses in a day? If you made profits, why you made profits? What is the winning pattern? What is the losing pattern? Right? And then once you identify those two patterns, you have to adopt to the winning one.
Okay.
That's my 2 cents on this.
Understood. Okay. So as you mentioned just now that sticking 9 to 5 on a phone and screen. So as when I started trading, like 1 or 2 years ago, like I started learning and get into things just on trading. I was not doing anything. So I got an addiction that I was looking at the charts every time. When I say every time, I wake up till night. I don't sleep. So how have you faced anything like that? And if you are facing something like that, how can you get out of it?
Yes, I've also gone through that road where sticking to the charts. That's what I said. Like you have to identify your pattern, like what things like you're doing wrong. So like as I said, like you have to stick to a game plan. Your game plan is really important. Like waking up and just like jumping onto the charts, like trading a random session, random price section, like it's not gonna make you profitable. It's not gonna give you that data set, right? So you have to make a game plan. Hey, you have to make a trading routine. Hey, I'm gonna wake up. I'm gonna do trade, like I'm gonna go to gym, I'm gonna read a book, or I'm gonna like spend some time with my other hobby or other profession, other business. And 5 p.m. New York time, I'll come to the charts. I'll look for a trade entry for the first 1 hour. If I get an entry, I'll trade that. And maximum time I'm spending on the charts, like it's 2 hours, right? That's a game plan. And once that's done, hey, I'm gonna call it a day, and spend time with my family, right? So the reason a lot of these guys, they are sticking to the charts 9 to 5, is because like when people they come into trading, they just like leave other side of life. So that's that's really important. Hey, you have to keep your other hobbies, you have to keep your life along with trading, right?
Yeah.
If you just like going all in with trading and just trying to rush it out, like it's not gonna work.
Okay. Yep. So this question is like related to your fitness. I seen you like you've been working out, and so does how does that feel? Is it a good thing? I mean, like, does it affect your trading in any way, or does it make it better, like doing fitness things?
That's a really good question. But basically, like once you stick to going to gym every single day, it really helps you in trading because it gives you that discipline, right? So if it's 8 p.m., like I have to go to the gym, and to be honest, like as I said, like you gotta have to have a life outside trading. If you don't
Yeah.
have a life outside trading, if you don't have like objectives outside trading, you will be just like a chart rat, and making losses and over trading. Having hobbies and life outside trading,
Yeah.
it really helps you to be profitable, or certainly it really gives an edge in your trading.
Okay. So as trading is really stressful, if you are facing through a losing streak or something like that, do you do meditation or similar to anything like that to calm yourself down, or is there any other thing that calm yourself out?
Well, for me, like it's if I take a loss, if I take two losses, like my meditation is just like closing the charts and going out to the gym. that's
Great.
that's a simple meditation you can have. Like close your charts, man. Go out with your friends, hang out. Like fuck it, you're gonna come back tomorrow, and there's gonna be another price action, another opportunity.
Yeah.
So that's the real way of meditation. It's not like hey, I took a loss and I'm gonna do a breathing exercise and I'm gonna come back to trading again. That doesn't really work. So
Great. Yeah. So I guess that's all the questions that I had and other people had. We cover all of them. So if you have